You are listening to KSG podcast. Here we are going to talk about India to tax digital MNCs. This is a short, crisp, concise, and exam oriented edited editorial for civil services aspirants. The source is Sachin Dave's article for The Economic Times. The corporate tax deal reached by the group of G7 developed nations may allow India to tax multinationals such as Google, Facebook, Twitter, and Amazon, but tax experts feel that India must fight this pact tooth and nail to avoid getting shortchanged. Apart from a minimum global corporate tax, the G7 decided on how market countries or countries where digital multinationals have a huge user base can tax them. The bloc has prescribed a formula for this even if the multinationals do not have a presence or permanent establishment in the country. The G7 committed to a global minimum tax of at least 15%. As per the deal, market countries are awarded the taxing rights on at least 20% of profit, exceeding a 10% margin for the largest and most profitable multinational enterprises, Reuters reported, citing a communique from G7 finance ministers seen by the agency. The question for India is whether taxing 20% of total net profits is enough to let go of the equalization levy. India should push for a minimum allocation as a floor irrespective of profitability. Currently, India slaps a 6% equalization levy on advertising revenue of large multinationals such as Google and Facebook. Although advertising revenue may just be a portion of their total revenue, in many cases, digital multinationals are passing on the cost to Indian consumers. Tax experts said the Indian administration, along with several other emerging economies, is set to unite against such a move being accepted in other forums. In the next few months, India will push for its right to tax MNCs at a higher rate in the Organization for Economic Cooperation and Development. This will set the tone of subsequent discussions at OECD or G20 level for arriving at an appropriate global consensus on the complex issue of allocation of taxing rights that triggered for the market jurisdictions on account of digitization of the global businesses and does not really require a significant or permanent presence in such jurisdictions. The Indian government is going to present its case that the user base has to be taken into consideration while deciding on how to tax digital multinationals. It is in developed countries' advantage that they ignore the user base as criteria while deciding on tax. India's user base is used for algorithms by most multinationals, and that's why it is extremely important and cannot be dealing to taxation. India's share in the revenue in most cases is less than 5% for most multinationals. However, the country's share in the total user base is substantially higher. One can't ignore the intangibles. This consensus at G7 level should give a fillip to the consistent ask by market or source jurisdictions for having a fair pie of taxes on the income that gets generated on account of the user and revenue base that such global companies have in these territories, such as India, said a tax expert close to the development. India has been strengthening its domestic laws in the last few years to deal with the issue. Many emerging countries, including India, feel that multinationals are escaping domestic taxation due to the maze of companies they have created in various tax friendly jurisdictions. The government this year has expanded the scope of the equalization levy imposed on cross border digital transactions in 2016 in a bid to tax internet giants' digital advertising revenues from India to include any purchase by an Indian or India based entity through an overseas e commerce platform. India has also introduced significant economic presence provisions in May, primarily intended to target digital multinationals that operate in the country without having a permanent establishment here. Under these provisions, the user base threshold has been defined for taxation. That's it for this podcast. Thank you for listening. To join KSG India courses and to crack the IELTS exam, visit ksgindia.com. You can also get a PDF of this podcast on ksgindia.com. Thanks for listening.